Good afternoon. My name is Ryan Toohill, Chief of Staff at the Alexandria Economic Development Partnership. I want to welcome you back to the NOVA Economic Development Alliance's 12-part webinar series, Beyond COVID-19, NOVA Business Resiliency. In our first webinar last week, we received highlights and insights from business, government, and nonprofit officials about how to survive the immediate impacts of the economic crisis. Today, we are going to take a deeper dive into funding and financing in the age of COVID-19. We hope that the information shared today will help you understand how to access capital to keep your businesses open and your employees on the payroll. Once again, I'd like to turn the program over to our moderator, John Jacobs, to lead our webinar discussion.
Great, thank you, Ryan, very much. And good afternoon, everyone. I'll just, as I did last week, take us through a bit of an agenda so we all can see that and understand how we're going to handle the webinar today. So you just heard from Ryan Toohill, Chief of Staff at Alexandria Economic Development Partnership. I am John Jacobs, the moderator for this session and for the series overall. We have three great panelists today. Howard Pisons, Executive Director of Virginia Small Business Financing Administration, Zachary Petrie, Manager of Small Business Lending at Virginia Community Capital, and Robert Day, Chief Financial Officer with Advantage Engineers. I want to just mention that we are taking questions throughout the session today. So we will receive those, and after the presentations, I'll do my best to read as many as I can. So please, at the bottom of your screen, if you mouse down, you'll have a pop-up bar and you'll see Q&A. So just go ahead and start submitting questions as you like. I think for Mac users, it's at the top of your screen. So same behavior. So there you go. So we'd love to get those questions. I do in these sessions now have a quick weekly update that I'd just like to share with you. So as we know, $484 billion of the new round for COVID relief was passed into law last Friday, $310 billion of which is dedicated to the Payroll Protection Program, PPP, $60 billion dedicated to the EIDL loans and other SBA-oriented grants. In the first round of the PPP, 1.6 million loans were serviced. As we know, those funds in the first round were depleted rather quickly in 14 days. Congress will reconvene on May 4th. There is the possibility of another round of funding as well. Both the House and the Senate are reconvening. Unemployment was released overnight from the Labor Department. Filings since mid-March as of today, 30.3 million. Which is an uptick of 3.8 million over last week. Department of Commerce reported on the 29th, yesterday, a 4.8% contraction of the US economy in the first quarter of 2020. Total coronavirus cases, and I give this stat as a baseline as well, from Johns Hopkins University Coronavirus Resource Center, worldwide cases 3.2 million, US 1 million cases. And in the US, as of this morning, 61,000 deaths. Lastly, I'll note that 81% of the US workforce is working remotely, at least partially, from a survey by Gartner Research that was released on April 14th. Today, we have three great speakers, Howard Pisons, Zachary Petrie, and Robert Day. We're going to kick off with Howard, please. And so Howard, I'm going to hand it right over to you, Executive Director of Virginia Small Business Financing Authority. Howard, please.
Thank you, John. Let me share my screen here. Okay. All right. How'd I do?
Great. Well done.
All right. Well, good. Well, thank you. Thank you so much, John, and thank you to the Economic Development Authority up in Alexandria for inviting me on this resiliency webinar series. I'm pleased to share our programs with you at the VSBFA with an eye toward future recovery. And our agency falls under the Secretary of Commerce and Trade, and who has organized several work groups to study the impact that COVID has had on Virginia's economy and develop ideas and programs for recovery. So with that in mind, I'll briefly introduce you to our programs that currently exist, and from which the foundation of the small business recovery will be addressed by us going forward, and of any future programs that may likely arise as a result of the CARES Act. As you know, there's going to be state stimulus coming down to each state to be funding, and the governor, Governor Northam, has already identified a number of areas where he wants to spend those funds, one of which is helping small businesses recover. So we expect that eventually, if that happens, that there will be some other programs that we'll be developing going forward. But I wanted to share with you the programs we have today, and our value proposition. Really, I highlight a small business access to capital, because really that is a foundation of what we are all about. And we do help lots of micro businesses with loans directly to them. I'm going to move on because we have limited time. But so who are we? We're going to make loans directly to small businesses, and we make loans to economic development authorities, all with the idea of giving access to small businesses to capital, and helping economic development authorities share those resources with companies in the localities and who they are planning to attract to localities. We also partner with banks. So the banks also make make loans to small businesses, and oftentimes there might be a gap in the equity or the credit that the bank needs to fill one way or the other. So they invite us in partnership with them, and we provide economic enhancement programs for them. We also have programs for investors, so that we can leverage public-private funding, and we are a multi-jurisdictional bond issuer. So, what's a small business? So this is the definition for the Code of Virginia for a small business that we follow. But, likely the businesses we're going to be supporting are going to be much smaller than that. I would guess many of the businesses that we support have less than 25 employees, and revenues much smaller than 10 million, and same thing with net worth. But this is the code that we have, that we typically follow for our small business programs. Our key financing drivers: economic development is essential, job creation, and you'll see, and we have other things here. Now you notice that this is not typical for key drivers of a typical community bank, say, or a typical lender. They have other components. The top three are really big drivers for us. Now, I apologize for the letters. The font is pretty small, but this is our direct loan program. We have a microloan program for small women-owned and minority-owned businesses. Those loans are from $10,000 to $25,000. They usually help small businesses who don't really have a relationship with banks, or it's hard to get a relationship with banks, so they typically are using credit cards and other resources. And so we provide $25,000 loans to them. They're term loans for 4 years, and you can see some of the qualifications there. For loans larger than 25 million, we'd like to partner them up with a bank, and if a bank is interested in doing loans greater than $25,000, we can join in that transaction with credit enhancements, which I'll explain later. We have a pretty large child care financing program that is in partnership with the Department of Social Services. We can do $10,000 loans for home-based providers, which have a smaller level of occupancy of child care. For the number of children they have in their home, and then up to $150,000 for child care centers. And you can see what some of the highlights and requirements are there. The credit enhancement programs, we have two programs: a cash collateral and a loan guarantee program. The eligible uses you can see are working capital, equipment, and general purposes, and some of the other reasons why of what we don't do, and that's typically refinancing or real estate where it's not owner occupied, like passive real estate investment, change of ownership, or goodwill. The excuse me. So the cash collateral program, it's a great program. We actually deposit cash in the account of a bank that they would use as additional security for a loan. This is where, say for example, someone wanted to purchase equipment and they needed 100% financing, but the bank would not be willing to do that. And so we can come in and fill that gap. And that's quite frequently the type of loan that we do on the loan guarantee program. That's similar, but the difference there is instead of putting cash on account as collateral security, we'll actually guarantee it up to 75%. And you can see the limitations that are outlined on the screen. So these two programs, and we've done a few of them with VCC, the guarantee program, we will do that the same way, but instead of the cash, like I mentioned, there'll just be a guarantee like a 7A, like the SBA. And the reason why banks like to work with us is our process is a little less onerous than the SBA. Moving on to the summary. So to summarize it, access to fund is addressing the fundamental need for access to capital is really the top of the list. Spurring economic growth and expansion, that obviously is the result of us working with small businesses. In Virginia, there are roughly 750,000 small businesses, and they really are a core and a backbone of Virginia's economy. We try to do transactions, especially with economic development authorities and industrial authorities. We try to work with them so that they are also creating jobs in their localities. And we think that going forward with the CARES Act, that we'll have an opportunity to create additional programs that would be geared toward more of a recovery, because these programs are not emergency plan programs, but they will be available on the other side of COVID when we start working with banks and EDAs again, and when the small businesses get back on their feet, they can use these programs. And hopefully we'll have other stimulus, potentially in the way of grants or additional programs with some loan forgiveness. There's a number of ideas that are popping up at the Secretary's office that we're considering, and we're hoping that the stimulus will come down that would be substantial and that we'd be able to roll that out in some future programs. So that's what I have. John, I'll send it over to you.
Great, great. Thanks. Thank you very much. I'm going to share mine briefly. Thanks very much, Howard. That was very helpful. And next we have Zachary Petrie speaking with us. And Zachary is the manager of small business lending at the Virginia Community Capital. So again, a pure lender, and be good to hear from you, Zachary. Please go right ahead and share your screen.
Thank you, John. Let me pull this up. All right, is that working? Is that coming through on y'all's end?
Yep, you just go to slideshow full. That would be great. So.
Oh, I pulled it on the wrong. Hold on one second.
Okay, no worries. We're all learning how to work remotely more and more.
There we go. How's that look?
Better, thank you.
Okay, appreciate it. Thank y'all for your patience. me navigating this technology. And thank you, John, for having me. So Virginia Community Capital, we're a community development financial institution that covers the Commonwealth. We've historically been doing small business loans as well as loans to developers around affordable housing. In working with, I'll focus on the small business lending side of things as it pertains to SBA PPP loans, because I think that there's some value in providing small businesses and nonprofits that are looking to take advantage of this product an understanding of how lenders are working through this process. It's unprecedented times. This product is unprecedented, both with the SBA as well as lenders that are working through it. The first tranche went quickly. The second tranche is what we're in now. So I'll kind of go through that in terms of talking on the timing and applying. So the first tranche of $349 billion went out in about 2 weeks. The SBA launched the second tranche of funding, $320 billion, on Monday. The submission system crashed most of Monday, and so there was a lag in submitting. But in general, we haven't seen the submission volume that most lenders were anticipating. Of that $320 billion, there's only about $110 billion out so far. We thought the money would probably run out by the end of the week, if not Monday, but it may last longer. And so I'm sharing that with you to kind of give you an understanding of, if you are looking to participate in the PPP loan program, it might not be too late, but it requires your action now. Absolutely, I would say if you're looking to submit to a PPP lender, get it in before the weekend. And so finding that lender is going to be important. Your first course of action, I would suggest, is talk with your bank. The reason being is because lenders are required to meet BSA compliance, which is a level of due diligence in ensuring that the right individual is signing on behalf of the entity, that we have social security numbers, driver's license, copies of driver's license, and things like that. So it's a lot easier and quicker to work with an existing client, whether they have a deposit account or a loan. And so you will find a lot of lenders are only working with existing clients on this. So first call your bank and see if they're participating. If they're not, you can go on the SBA's website and find those SBA 7A and 504 participating lenders. They don't have to be 7A participating lenders, but that's a good place to start and start calling. Virginia Community Capital is participating in this outside of existing clients as well. So we're taking on new clients that we don't have a relationship with yet, and we're happy to field their application. The link to our application website is at the end of this presentation. So again, there's an urgency here. If you're looking to participate in PPP, you need to get an application in, I would say, before the weekend for at least this round. Okay. For those of you that are listening in on this webinar and have already received an SBA loan number for a PPP loan, I wanted to kind of go through the forgiveness stage, because there are a lot of questions, and there will be a lot of questions on how does this get forgiven. And so the PPP product is a loan that's issued with it's at 1%, and it's a 2-year loan with the first 6 months principal and interest deferred with interest accruing. Now, if the business or nonprofit uses the proceeds in line with eligible use of proceeds as issued by the SBA guidelines, then it can be 100% forgiven. And so the borrower will have paid nothing on that loan. The fees that the bank receives come directly from the SBA. And so if the borrower follows all guidelines, can walk away with effectively a grant. And so that's the big draw of this program. So forgiveness, the guidelines on this, some have kind of trickled in, but they're not completely clear as to how this works, and there are a lot of questions around them. The time frame of it is the clock starts as soon as you get your first disbursement, or I should say as soon as you get disbursement. I think all lenders are doing a one-time disbursement. As soon as you close the loan, it's funded into your account. Your 8-week clock starts then to use the proceeds. And so the eligible use of proceeds are outlined in the guidelines. At the end of my slides, you'll see a few links that provide you the SBA issued guidelines, or you could go on the SBA's website and find those guidelines. But the gist of it is, at the heart of this program, I mean, the name, Paycheck Protection Program, is to safeguard against, it's effectively another way of addressing unemployment. And so 75% or more of the use of proceeds needs to go to payroll. So outside of that, you can use it for group healthcare benefits, insurance premiums, mortgage interest payments, not mortgage principal payments, mortgage interest payments, rent payments, utility payments, interest payments on other debt incurred prior to February 15th of this year. And then also you can use it to refinance the EIDL loan. Now, there's some confusion still a little bit around, if I have an EIDL loan, can I get a PPP? Yes, you can, but you can't use it for the same purpose. So you can't double dip. The EIDL loan, if you have that up to $10,000 and it's going to be forgiven, then that, from the guidance that's been issued thus far, everything's pointing in the direction that if you say you get a $10,000 EIDL loan, that's going to be forgiven, and you have a $20,000 PPP loan, that $10,000 comes out of the $20,000 PPP that could be forgiven. So $10,000 of your PPP would not be forgiven. It would either stay on as a note that you pay back over the remaining of the 18 months after the P&I start, or you just pay it all back in one lump sum if you don't use it. And so again, at the heart of this program is meant to cover payroll costs, payroll expenses. And so the SBA doesn't really want the majority of the proceeds to go towards other business expenses that are not maintaining payroll. Qualifying for forgiveness, this is where the questions are coming in. We have a lot of borrowers who we've dispersed funds to, and they have questions about, okay, I had 20 employees to start the year, and all of last year I had to let 10 of them go. I can only afford to bring 5 back. So if I'm at 15, does that mean I'll get full forgiveness? All the indicators are showing that you wouldn't, because you wouldn't need that full amount of money to cover 20-person payroll, because you only have 15. And so you may have to pay the equivalent of those 5 persons payrolls for the 8-week period. You may have to give that back. Again, the guidelines, more guidelines are to be issued, or that's what SBA tells us. And so continue to monitor SBA's website for that information and for the up-to-date guidelines that are already been issued. Okay. And then this slide, I just want to, I want to kind of put the understanding to the borrower of this program and what you are certifying when you are applying. The onus on this program is to the borrower. And so there's a big certification at the end of the 2483 form that's being filled out by the applicant. And what are you certifying there? You're certifying that you've been in operations, or you were in operations on February 15th of this year. There is a necessity of the loan due to economic certainty. Something has, obviously, COVID has occurred, and that's affected your business. And so therefore, you need this loan to continue on operating at least close to as you had been. Funds will be used for eligible purposes, as we talked about before. Borrower will provide documentation evidencing use of proceeds for loan forgiveness. So that's a big part of this. The onus is on the borrower as to documentation of the use of proceeds and to determining what is an eligible use of proceeds and what is not. Our full understanding so far with the guidelines as lenders are that after the 8-week period, the borrower will provide the lender with a package with all that documentation, and the lender doesn't need to verify anything. The lender just takes it at its word, submits it to the SBA, and then it comes back. So the lender's just kind of this middleman that's not verifying anything, because the SBA says the borrower needs to be aware of the guidelines and follow them to the T and document as well. borrower will not receive another loan under this program, so you can't have more than one PPP loan at this time. All documents provided by borrower are accurate and correct. Borrower understands that knowingly making false statements in obtaining this loan is punishable by law. And there are resources that the Treasury Department has allocated for coming months to audit the portfolio. Now, that's going to be quite a task, given that there will probably, at the end of the first tranche, there was 1.6 million borrowers. This second tranche, the average loan size is even smaller, likely will be maybe even half of what it was on the last go around. And so there may be 4 million, 4.5 million borrowers. So that's a lot of loans to audit. But regardless, you want to make sure that you are following the instructions, the guidelines, and that you're working towards the intent of this and that you're documenting everything. And so here's that top link is VCC's link to apply for the PPP program through us. And then there's more information on the SBA PPP guidelines on those following links. So I'm going to turn it back over to John.
Great. Thanks, Zachary. Thanks very much. Very helpful. Just trying to catch up here to my own screen. Great. So next we have Robert Day, who is the Chief Financial Officer with Advantage Engineers. And Robert, in his position, obviously, is on the client side, if you will, from the lending perspective and from the government perspective. So Robert, I'll be driving your slides. So you just tell me when to flip and I will. And Robert, could you unmute yourself if you would? Thank you.
Great idea. So when this situation first occurred, we went back to basics. Obviously, we created our 13-week cash flow, looked at our current AR, just looked at sort of evaluating our need for the loan to make sure that we fit in the criteria. When we first looked at it, the idle loans were sort of brought out first as an option. We looked at those, the criteria that was established for them, the fact that they weren't forgivable, and just sort of the size of the loans didn't really seem to fit our needs. We also looked at some of the state loans, obviously, that Governor Hogan here in Maryland had put out for us, and again, didn't really seem to fit our criteria. The PPP loan did, really fit in what we were looking for. The fact that it was forgivable and, the ability to sort of keep our payroll and everything else intact going forward for that 8-week period, was very enlightening. So, we chose to go forward with that loan. We started looking at sort of our staff. We were a little ahead of the game in that before, our states that we were in had indicated that they wanted people to stay at home. We actually went forth and made sure that all of our staff felt safe, felt that they could work at home if they needed to. So we actually were sort of a little ahead of that curve in getting our people to look at home, work from home rather. We locked down all of our corporate travel from a air flight perspective. Obviously, a lot of our work, we visit sites, we visit towers and sites where our equipment's at. We're an A&E firm that specializes mostly in the telecom industry. So we're out at tower locations. As long as people were just driving, that was still okay for them to do that. They were out being able to do their site inspections and that type of work without too much interaction with other people. We provided, personal safety equipment for our people to be able to do their job safely. So, in our evaluation, we were actually initially very fortunate in that most of our work could be ongoing. One of the immediate impacts that we had were sort of like local offices where we had to get permits to sort of continue to do our work. So we were impressed with a lot of the local jurisdictions where up until that point, you had to actually go in. It was sort of old-fashioned. You had to go into the county courthouse or the local areas. You had to slide a check under the window and get your permit. And a lot of them moved pretty quickly to move their functionality online, and we were able to get past that hurdle with a lot of help from the local jurisdictions in that area. So, from that regard, we were able to keep moving forward. But that created another problem, right? Where we had a lot of, whether it's Sarbanes-Oxley issues or, things where we wanted to control the payments of stuff, you had to sort of think on your feet a little bit with these people needing to sort of go online and get their permits and stuff like that. We had to go back and adjust all of our corporate credit card programs to make sure that we could spend the money online in order to charge those fees, if you will, the permit fees that we needed to get access to a lot of our locations. So you just had to be flexible in, as the governments were evolving and our policies, we had to evolve along with them. Okay, go on next. So as far as, our specific experience, we were working with a single bank. Our bank was a SBA lender. We had a previous relationship with them. So that certainly gave us priority sort of in their queue to help us get our loan submitted. We could only submit with them. Obviously, the guidelines indicate that they don't want you submitting more than one loan. So, it made sense for us to sort of move forward with the bank that we had the relationship with. From a communication standpoint, we were in communication with them, I would say a good 2 weeks before we submitted our loan, making sure we understood, what they understood, where were they at with what documentation was going to be needed so that we could start to put it together. Obviously, everyone was, going a little crazy because the rules were changing probably every 2 to 3 days. SBA was putting out new guidelines, new criteria. So it was evolving. So you couldn't be too set on what you were putting together, but you had to have a good idea sort of, how you were putting together. The questions that were evolving were, were subcontractors allowed, and were some other, what type of taxes potentially were excluded. So those were some of the things that really didn't get fine-tuned until the very end, until just a couple days before the loan was submitted, as far as some of that criteria. But we were in communication with our bank. They were letting us know this is what they have at this point. Our bank actually provided us a spreadsheet to sort of collect the information for them, to provide it back to them, understanding that it came off of pay registers or it came off of bills for, medical premiums or what the source of the documentation was. But they actually gave us a worksheet, if you will, to say, this is how we want you to present it to us to calculate the amount of the loan. That made it easier for them to audit. Obviously, they were, they were sort of being the go-between the SBA at that point, so we didn't actually have to go straight to the SBA website. That's good and bad, right? So we were able to submit it. I was able to actually submit my loan on April 3rd, the day they sort of opened up their own portal at our bank. It took a couple days. We got approval we got notification rather from our bank that they acknowledged receiving it. Everything looks good. But then it took another 4 days for them to sort of review it, get it submitted to the SBA, and get the SBA approval back. So the SBA actually issues you a sort of a confirmation number that they have your loan and give you a loan number and all that good stuff. Over the next 10 days, again, we were in, communication with our bank every 2 to 3 days. They were working again on the funding documents, right? So they said, look, your loan's been approved. SBA is putting out sort of standardized loan documents for this. They're still going to go through our portal again. They're going to sign them with us, before, we can issue out. So we were in communication. I think the guidelines indicate that they are supposed to only have 10 days to issue the funds, and they did it within that 10-day period. Actually, right on the 10th day, we did receive our funds. We received 100% of our loan calculation, so they approved sort of how we calculated what we were asking for, and gave us 100% of those funds. Obviously, now we're in preparation of trying to prepare our support for the conversion. Like Zachary said, there's still a lot of ambiguity out there on the guidelines to that. One of the big ones, that I've read and talked to both to my loan and to, some equity people is the 8 weeks that are supposed to be are the cycle for you to get the calculate what you've spent and what you can be forgiven on. does the cost have to be incurred in those 8 weeks, or does it have to be spent in those 8 weeks, or can it be either or can it be both? So, there's things like that that we really need to get further clarity on from the SBA to make sure that we're putting the right documents together for the support. Okay, next. So yeah, so from a prolonged shutdown, obviously, the loan in of itself, will help ensure that we're able to keep working. It certainly had an impact from a, not necessarily a production or operations standpoint, rather. We work in the telecom industry. They certainly have recognize their shortcomings in a stark way with how many people are requiring sort of the wireless and the work from home environment. So their capital expenditures and their willingness to sort of move forward with it with what they need to move forward with in this time frame really hasn't slowed down, but some of their infrastructure potentially has, because if you think about it, all of Verizon's and all of T-Mobile's and all of AT&T's people, they're working from home as well. So our ability to sort of get bills out, get some of the other sort of back office stuff done because everyone's working from home certainly has impacted us. But thankfully not too much from an operations standpoint at this point. Long term, it's from a mental aspect on the employees, as far as how it's impacting people that are having to stay home. It's been challenges to our HR department and our executive staff, how to make sure that people are being able to differentiate between working from home and having home time and that type of stuff. So it certainly is. It's an ongoing consideration that the executive team at Advantage Engineers is continuing to watch to make sure that our employees and our staff are appropriately handling the situation. What else on here? So changes to customers. I'd already talked about the securing the permits. I mean, fortunately, like I said, our customer base really hasn't changed, and there have been no major contract cancellations or anything like that. And in some instances, they're actually even increasing the workload that they're providing us. So that's that's been very encouraging. The final bullet there. It's how long is this good for, right? So how long or how long is the impact going to sort of have a residual effect? This covers sort of 8 weeks worth of payroll, but is that going to be enough to sort of cover everyone through the end? So.
Great, thank you, Robert. Thanks very much. As I mentioned earlier, we are taking questions, so this is the time to consider what questions you want to ask. Thanks for those who have come in with questions. And I'm just going to take a look here and at those questions. And I think we answered a couple actually, but I'll come back to them. There's a question here that's oriented toward Howard regarding Virginia Small Business Authority working with nonprofits and limits lines of credit, not just direct loans. So Howard, if you hear this question, and you can see it as well, just a word or two about nonprofits, lines of credit versus direct loan.
Yeah, so we can work with nonprofits. Regrettably, we don't have a working capital facility where we're considering that it takes a large amount of capital to provide those commitments because they remain outstanding. They don't get repaid. And the funding mechanism that we use now is it's a finite bucket of money that gets repaid and we re-lend it out. So working capital will be difficult at this time.
And then there's a question that we had a little earlier regarding the EIDL loan cap at $25,000. Again, Howard Zachary, so the question is, this individual has been on the SBA website, noticed one cannot apply for greater amounts. Is the intention of the SBA to bring back loans in larger amounts? And this person says that they can pledge collateral. So maybe, Howard, I'll ask you again, and Zachary, if you can tell on that.
Sure. So my understanding is that those are the quick loans you can get from the SBA up to $25,000 that are not that don't need to be secured or guaranteed. To go beyond that, you'd have to apply for the normal EIDL loan program.
Okay, great. If a business has been declined for the PPP, would that hinder applying through another bank? Zachary, maybe you could answer this one.
Yeah, no, it wouldn't, but you would need to, when you're approaching, you'd want to know why you got declined. And so absolutely start with that when you're approaching another lender. Otherwise, you'll waste their time and your time. And it may be the course of 4 days, and 4 days could mean that you don't get a loan. So I would definitely absolutely approach another lender, but let them know as to why you were declined from the other institution.
Thanks for that. And I'm getting a lot of questions about, will these slides be available? Yes, they will. We'll post these slides along with the video on the novaeda.org website as quickly as we can. Next question. I started an event planning and catering one-person LLC in September of 2019. Now COVID, since I haven't been in a business long and have no employees, am I ineligible for assistance? Any recommendations for a $1,000 loan to cover my monthly expenses? So maybe Zachary, please. Yeah,
absolutely. So for a single member LLC, you can use your Schedule C. In fact, that's what you have to use. So your 2019 Schedule C, which is different, the IRS changed the structure of the Schedule C for 2019. So it's line item 31 that shows your net earnings. And there's a way to calculate what your PPP loan amount can be based off that line item 31. And so if you have a positive line item 31, then you could get a loan for the formula that kicks out. You have a positive line item 31. I know you've only been in business since September. So say you've only been in business for a quarter. You would divide that number by 3 to get your monthly average, and then multiply that by 2.5 times to see. Now, so anyways, that's how you could get a PPP loan. If that number is not positive and you had a loss for the year because you just started it, then PPP, you're not going to be eligible for PPP, and an EIDL loan might be the way to go, because my understanding, to get that 10,000 or less is pretty easy and it's forgivable.
A question, Howard, for you. What is the benefit of working through the Virginia Small Business Financing Authority versus going and getting a loan directly from a bank?
Sure, thank you. So we typically work with many borrowers who don't have access to banks. So if you have access to a bank who's willing to work with you, that's great. I would say that we have different objectives. Our mission is a little different. We really want to help we really want to help small businesses. So we might take a little step farther. We might, our collateral requirements, if there are any, might be less onerous. So we're looking at really helping businesses stay afloat and to help them start and to keep them going. Banks are the same thing. They're just a little bit more conservative, and they might require more on the underwriting side of it. For a $25,000 loan with us, it's pretty straightforward, pretty easy in terms of what you're required to give us. And I think you'll find the experience just be a little different.
Great, thanks. And the question, the EIDL loans, does one apply via the bank or directly through SBA for those?
SBA.
Directly with SBA, because that's their loan, right? It's not a loan guarantee.
Right, they're managing that.
Okay.
Correct.
Just a moment, just going through here. Gentlemen, if you see questions that you'd like to address as well, I can only read so fast. There's one question here. No earning. So a company has been it's a C Corp, no employees yet, in business since August of last year. And this goes to the whole question of sole proprietor and freelance worker, the gig economy, I think I'm trying to say, I'm not sure. But are they eligible if they have been a C Corp, I assume in Virginia, and have no earnings so far? Is that Is there eligibility? Maybe Zachary, you can handle that one.
So the question is, for a PPP loan, they're a C Corp, but they have no earnings?
No, nor do they have staff apart from themselves, I imagine.
Yeah, there's nothing historically that they could apply for that formula to generate a number. I mean, unless if they were, yeah, if they have no staff, no payroll expenses, and no earnings, no.
I think I know the answer to this one. 501c3s, well, actually I don't. 501c3s, are they qualified for an idle loan?
My understanding is yes. 501c3 do qualify for idle loans.
Okay, that's great. And also I believe for the PPP, certainly, yeah.
Correct. They broadened the eligibility for idle loans, and even including faith-based organizations, whether they're a 501c3 certified or not. They just need to be acting like and managing the organization like a 501c3.
Great. Here's a question. I think, Zachary, I'm going to maybe ask you to respond. I've been approved for an idle loan as well as a PPP. I would like clarification on how these loans are overlapped. Based on the conversation, it seems to be the idle amounts will be deducted from the PPP loan. This obviously will leave us with a lesser amount that can be used for payroll and other expenses. Zachary, can you go back into that one?
Yeah, absolutely. So there are two different types of idle loans. There's the idle COVID-19, which is the forgivable up to $10,000 amount. And then there's the idle loan, which is not a forgivable, it's a loan. And so if you have that idle loan and you also are applying for a PPP loan, if that idle loan has been used for payroll, then it has to be refinanced into that PPP loan, because you can't get an idle loan and a PPP loan to cover the same costs. Now, if you have the COVID-19 idle loan, that forgivable up to 10,000 loan, and you get a SBA PPP loan, the guidance as we're understanding it so far, and I'm hoping there will be more guidance issued on this, is that 10,000, however much of that idle that you have, that is deducted from the forgivable amount of your PPP. So you can still get a PPP for the full amount, but if you have an idle loan that's forgiven, my understanding is that it will be deducted from that forgivable amount of the PPP loan.
Great, and this is actually from, it's an answer from an attendee, and it reads, if you are a Fairfax County company, please consider applying for the zero microloan announced by the county. The deadline for this lottery is today, and there is a very long URL, but I think if you go to Fairfax Micro Loan Program, you'll get there, and you'll get, again, the deadline for that is today. Robert, you mentioned that you were not attracted to, your company was not attracted to the idle loan. Can you talk a bit, why not, other than it was a loan, it's a loan, not forgivable per se?
Right. Well, I mean, that and just sort of the criteria that was sort of initially laid out for the idle loan, as far as needing to show like what you needed to show as damages and that type of stuff. The PPP loan really just showed that you were impacted, right? You didn't have to quantify that, I think, or in our interpretation of it, like on the idle loan, you actually had to quantify sort of what your damages were and show how you were impacted, where the PPP loan was more, were you impacted by it? Yes, but you didn't have to really quantify it.
Okay, that's great. And we're kind of coming up against time a little bit, but one question about has an individual applied for an idle loan, hasn't heard back. Is that, visit the SBA website kind of answer on that? Maybe Howard?
Sorry, can you repeat that?
Yeah, so this person has applied for an idle loan and has not heard back, and they don't have a mechanism. They just want to figure out, how do I follow up?
That's a question that we get almost every single day. I'm sure Zachary does too. The only thing available is whatever's posted through the internet or what you can get, through telephone customer service representatives. But my understanding is it's very hard to get any answer from the SBA on any kind of status. And people are telling us every single day that they're calling and calling and calling, and they have nowhere to go, so they call us, even though we're not part of the SBA. So I think it's going to be very difficult still. If you have a number, I guess if you received a number, that's at this point in time, I think that is your only saving grace, that you have that number that you created when you were assigned and when you made your loan application. And so hopefully when that happens, that means it's been a successful application and you'll be hearing from them at some point in time.
I'm just going to chime in. I've had a few borrowers, and I think actually someone did a Q&A on here to even say that they had applied for EIDL, and then there was just money in their account one day. No notification at all. That was the same thing with all of the borrowers that we have that have received EIDL. There's no notification. There's just money in your account one day. And so monitor your account until that process changes. That's the only way, I guess, the SBA is letting you know that you received funds.
We're getting a few questions about, and it seems consistent in this conversation, that there's not tremendous clarity on the process or the criteria to convert the PPP loan to a grant. Because this is another individual says they were also awarded a PPP, but they're receiving zero communication from their lender how to do it.
Yeah.
Is that the case?
Yeah, if I could, and actually Robert was talking to this too. There's limited guidelines that have been issued. If you think about the immensity of this product that the SBA has had the burden of issuing through their lenders, I mean, it's a magnitude that we've never experienced, not even a fraction of this. And so they're issuing guidance on a step-by-step basis as we come to those steps. And so if you think about it, phase 2 is the forgiveness component. They still haven't really tightened down how to get the loans out. And so they're still issuing guidance, refining that. I have no doubt that they will issue more guidance on how to make sure that you follow the guidelines that they haven't yet issued to qualify for forgiveness. Until that happens, I've worked with the SBA, been a lending institution that has worked with the SBA for 8 years. As long as you are showing that you have read all the guidance that you can, that you are working within the intent of this program, and that you're documenting everything, then there will be grace given. They're really only going to be going after those that are doing obvious fraud. And so there are so many instances that I speak with my borrowers that call and say, hey, similar to what Robert's trying to figure out, are we calculating expenses as they're incurred, or when are we saying that they're costs? That's a great question. There's a bunch of great questions that I don't know that they will ever be providing clear answers to, but as long as you do your best and document and stay consistent, then I think you'll be okay. But I mean, that's all you can do right now. And the lenders don't have any more guidance either. We have the same issued guidance that the borrowers have, so.
Thanks for that. We'll probably take a couple of more questions here. There's several regarding child care centers. And this question is aimed toward Howard. It says, we are a child care center and are interested in the financing you described in your presentation. How do we get started? And just before you answer that, Howard, let me gang up on you with the other one I saw, which is the distinction between an in-home child care center and a, I guess, facility-based child care center.
Yeah, so I can answer both. So the in-home child care centers are restricted. They're limited to the capacity of the children that they're caring for. And so when they go above that number, I think it's like 5. When they go above that number, then they can apply for licenses to become a child care center. So it's limited. It's people who offer their homes up. They want to have a service, but they can't overcrowd it. They can only use it, but a certain number of. They can only go up to a certain number of headcount, call it. With respect to child care loans, I just want to make one thing clear, that so right now we don't have, our mandate is to provide financing for industries, and there may only be very few that are not really impacted by COVID. And we are referring all of those questions and inquiries to the SBA, who is mandated and who has the mandate to provide stimulus financing. So if you are impacted by COVID, the best place to go, as frustrating as it might be, would be the SBA. So our programs are geared to just, I guess, the normal course of business as the economy was pre-COVID and post-COVID. So that's where we are with that. But I'm happy to listen, because I know that child care centers, some of them have actually been very crucial in providing services for emergency service providers who need to find healthcare centers. So there still could be a good reason why we can do a child care center even in COVID. So I would suggest that you contact us.
And they would contact you via your website?
Correct.
Okay.
Or they can contact me. I apologize, I didn't put a contact list on my, but I can provide that. How about I provide that? We can shoot it out?
Yes, I will. Sure, you bet. I'll follow up and send out your contact to those on the call today, if that's fine with you.
Sure. Yep, and I'll include a page on my presentation with that contact information too when I send it over to you.
All right, great. I hope you have multiple telephones. Great. So folks, unfortunately, we've run out a bit of time, but we're getting a fair number of questions. Will this be available? The answer is yes. This webinar will be available, including the voice recording and on the slides, on the novaeda.org website. I think I could have that. I'll have that up today by the end of the day. And then I will get the PowerPoint slides as well as quickly as I can. Let me say that you'll also find there last week our kickoff webinar, which focused on, we call it the Business Survival Toolkit. And so that you'll also find on the Nova EDA website, along with this by the end of today. Thank you all very much for being here. Thanks for your time. Thanks for your great questions. We will be again live next week, next Thursday, 2 p.m. Eastern, and that session will focus much more on staff. And so, you know, we'll staffing, what's best for my business, what's best for my employees. So next Thursday, the 7th, it says on the slide, at 2 p.m. Eastern. Thank you all very much, gentlemen, our panelists. Thanks very much.